What's up, traders? Welcome back from the holiday in America. We have the Labor Day holiday, which is a day that most celebrate being off of work, but it just means that the market is closed, so I can't trade. So I tend to not really enjoy those days because I love it when the market's open. So as you may have noticed, before the Labor Day holiday weekend, we had a little bit of a sell-off on especially the tech stocks, and that sell-off continued into this week. I saw a lot of people get their accounts blown out because they were way too long Tesla and Apple. Believe it or not, there are actually more stocks in the market than just Tesla and Apple. I know that's surprising. I know some people know there's this thing called the SPY, which is an ETF that some people occasionally buy puts on. But there are actually other stocks out there, and it may be time to start looking at some of these other stocks. What do I know? I've only been doing this for a few years. I just happen to have the benefit of knowing that tech stocks don't always just go up. In fact, they go up until they have spectacular down moves. And I hate to do a victory lap on people that have lost money, but I did call this last week when I was talking about my thoughts on the Tesla and Apple split, about how this was not bullish. The hype had been running it all the way up. And so now, where are we? Well, nobody listened, and they got the best of education, which is in a painful experience. But that's not what I want to really talk about today. What I want to get down for posterity is an important element of price action that everyone needs to look at right now and lock in your head and remember. And that's going to be on the SPY. So back when we were approaching this level on the SPY, about 339.8 to be exact, this was back in August, we were getting up here. We bloop, hit it and came back down, a little small pullback, and then we busted above it. Now, up until this moment, it looked like the market was just going to keep going up, 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 up. But that's not healthy. That's actually not healthy. What you need to have a good steady uptrend without a big down move is a market to do something like this, where it goes up, down, up, down, up. And that's what we finally got. We finally got a pullback, but in the grand scheme of things, this was really just a 7% pullback of this move. We needed something like this so that this market continue going up. What you don't want to have is in tech stocks where you have this giant run up of 1,000%, it naturally has to have a very large down move to correct. What the SPY has done is come back to this past all-time high, which everyone knows is somewhat a self-fulfilling prophecy. We pegged it here, and then yesterday we had a little bit of a scare. Now, what I was looking for was to see if we had a close below that level, and we did. But today, we have a close above the level. So we're fighting this past all-time high level. If we want some extra confirmation and we can be patient, then we should look at the weekly. Last week, we closed above it. This week, we've got some volatility, and the real test is going to be where this bar closes this week. If we close above it, I don't know what the future brings, but what I'm going to be betting on is this market to rip up to the election. And I say the election because we all know that's going to be crazy around that time. But the timing of this around the Labor Day holiday, well before the election, is right for this to signal a run up. Some people on other YouTube channels are noting this as a potential false breakout. It could still very well be. If we close below this level, we could be confirming this as a resistance. This could have been a false breakout. But if we hold above it, that's going to be a confirmation of this former resistance becoming support. And that's what I'm going to be looking at. Now, another thing I wanted to talk about is this idea of dip buying and dollar cost averaging. I hate it. One of my favorite traders, Paul Tudor Jones, has a saying: losers average losers. And I believe it. You're a loser if you're dollar cost averaging down. When you take a trade, when you enter, and the market goes your way, your trade is correct. When you take a trade and it goes against you and you show a loss, you're wrong. Why would you want to be more wrong? Stop being more wrong by buying into it. What you're doing is taking drugs. People take drugs because they feel good. Refusing to take that loss feels good in the moment, but just like having a drug addiction, you're pushing off that pain. You're pushing off the negative effects far down the road. You're just adding more risk. What you should be doing is adding to winners. And a lot of people don't think to do that. They want to protect their position by buying more because they don't want to take that loss. Trading is about managing losers, period. You got to get used to it. Why this is an issue is because of Apple. A lot of people think that they're dip buying Apple. I went back to show some people in the Discord that from top to bottom, going back to 2012, Apple has had some major pullbacks. 44%, 32%, 39%, 35%, somewhere between 30 and 40% is what an actual dip on Apple historically looks like. So if you're buying right now, you're basically just admitting, I missed the move, I'm trying to chase it and capture a little bit. You're not being smart at all. You should be taking profits. That's the only thing that you should be doing in a move like this, or waiting for a real dip, a real opportunity. And if you're afraid that you're going to miss the opportunity in Apple and you're going to regret it, well, that's why I go back to saying there's other stocks in the market to trade. It doesn't matter if you miss this. I get it. You just started this year. You're trying to make the money you can. You're trying to learn. You don't have the benefit of trading for years and years to understand that other things happen to move. They do. There's opportunity out there. There's 3,000 stocks in the Russell. There's 500 in the S&P. There's 30 in the Dow. Just look at some of them. Just a few. But if you keep focusing on these stocks, Apple and Tesla, you're going to make bad decisions because eventually these things are going to pull back. They will. I don't care if you're a 25-year long-term holder of Tesla because you think it's the next thing since sliced bread. There are still other things. And if you think that this is the new future, you really actually need to go back in history and look at the stock market of the railroads. Railroads were the newest thing in transportation back at the turn of the 20th century. Within about 30 years, things that have been trading at $100 per share were trading at the pennies. You don't know what the future brings, which is why you can only control what you can, which is your risk. And as a final note, I've had a lot of people that have come to me wanting me to teach them about trading. I'm not opposed to this, but you got to understand, I don't charge people. I don't believe in taking money from people if I don't believe that I can give them value. Because I know that as a trader, your results are going to be directly proportionate to the effort that you put into it. There are plenty of people out there that will sell you the dream that if you just pay them $20 a month or $3,000 for a class, that you can be financially independent. But it never made sense to me why you would need to pay someone else, subscribe to a service to take signals, and be free. You're just making yourself dependent on them. But I did have someone come to me and ask me about a education course. And they asked me about, is this a good deal? Can I learn something? Can I really make the money that they claim they're making? First of all, don't worry about the money. I know that's hard to say because trading is about the money. But focus on the education. I do believe that education can be valuable if you get something out of it. But if you want a real education, if you really don't know where to begin, it's very, very simple. Here's what you do. You open an account, you put on a trade, and you log it in a spreadsheet. That's all you really have to do to begin. I know it seems a little too simple. I know that you're going to be very concerned about what if I take a loss? How do I know what to buy? Don't worry about that. Believe it or not, don't worry about that. Experience is your best teacher. So go out there and get experience. Just take some trades. Take some losses. Take some wins. See how it makes you feel. See if you can figure out what it is. And once you pass that point, come talk to me on Discord. Keep your risk low, guys, and I'll see you in the next video.